Good morning, traders. It's Tuesday, December the 17th. Taking a look at the charts, we got the SP 500 and we've got our cycle analysis down along the bottom here. More or less, you can see here the market's running higher. We're getting a little overextended yesterday. I pointed out in our afternoon update the market has popped above a short-term overbought territory. We had a gap up yesterday, and we'll see how the market recovers. But overall, we've had some pretty strong strength with some kind of gaps and goes, meaning the market gaps up and just keeps on going. Very strong buying momentum. But overall, if we look down at these larger cycles in the bottom here, this pink line is when we've got some fairly significant intermediate cycles. You can see we've got these higher lows in the cycle. The market continues to bounce up, and we're starting to get pretty squished into a territory where we're really kind of running and getting extended. Now, overall, when the cycles are in this upper zone here, really this whole upper zone, this is when you're kind of in a power zone, meaning this whole time that you're up here, this is when the market can just continue to muscle itself up. It's when it starts to break down from this upper band is when we start to see corrections in the market. And that's what we were starting to see last week. Right here, the market had popped up and just started to reverse down. And then obviously we had news come out and really kind of buck the trend and kicked it back into an uptrend. Overall, the market continues to work itself higher. It has had a fairly long consolidation here, which means it's got some energy. It could continue to run and scream higher, but overall, you got to know we are in this upper zone. It's in the power zone. We just need to be aware of when the cycles start to reverse and we start to get one of these breakdowns, because we're eventually going to see a quick type of pullback. And the question is, what size is it going to be? And will it be something more like this one back here, where the market really sold off, chopped around for a little while, consolidated, and then had the second half of the move to the downside? So the question is, what size pullback are we going to get when the time comes? I feel as though this kind of major cycle to the upside is with multiple shorter term cycles within them. I think when it comes to an end, we're going to get something fairly ugly, and we could start to see bonds and precious metals really do well in early 2020 once this current cycle kind of fizzles out and starts to roll over. But until then, the markets are pretty strong, continue to muscle higher, and I wouldn't be surprised if we see a little weakness today. This is just the market moving a little too far, too fast. But I mean, all it means is we need a one-day pause or pullback, and the market's re-energized and ready to go again. Let's take a look over the chart of bonds. Bonds are up 1/3%. Overall, they continue to consolidate and flag. They're coming down to the 20-day moving, or sorry, the 200-day moving average. The cycle analysis, more or less for bonds, really isn't giving us a whole lot of insight. More or less, the long-term cycle is still to the upside, but we need to break a previous pivot high. We need to see some upward momentum divergence in here, meaning we need to start to see this orange line start to move higher and break a previous high, and that'll give us some signs that there's some upward momentum. Cycles are actually starting to fall in favor to a longer term cycle that has been moving down to start rotating and moving up, and that's when we could start to see this expand. But hasn't happened yet. We're close. If we start to see the cycle break this previous high from the beginning of December, then we could be on an upward swing for another leg higher in bonds. Now, if we look at gold, very similar chart pattern as bonds. And more or less, the gold market had a cycle strong zone, and now we're down into an oversold area, or a cycle low, a downward draft. We've got cycle high, we're back down to a cycle low, and we're just letting the market work itself out. Feels like it's really close to breaking out. Gold is flirting here with the key moving averages. It's stuck under the 50-day, stuck under some resistance here. Overall, the gold miners, if we take a look over at those, they're showing a little more signs of upward momentum. You can see here we've got the upward cycle, you've got a downward phase, you've got an upward phase, a downward phase, and more or less it's back getting into this uptrend. It's starting to break above this high here, and it's starting to show signs that price has gone down. Now we're starting to make some higher lows, some higher highs. So gold miners are starting to lead the way, and the big question is this, are we going to see this continue to pull back? or is it going to hold its ground while equities rally? There could be something very similar to this here, where you get the first kind of pop, some chatter, and then you start to see it really take off and lead the way. Nice thing about gold miners is they tend to lead physical gold. So if gold miners do pop and start to run, you can get long into the gold ETF, and there's different leverage, 1, 2, and 3 times leverage, and usually gold lags a couple days, so it can actually get you in on the same breakout just a couple days later. Let's take a look over at silver real quick. Here is the silver, and silver's doing very similar to bonds and gold and miners, consolidating. Silver's still more in a downward bias. Cycles are still down near the low, still kind of working themselves out. We're making a series of bear flags, stair-stepping our way down. So silver's got a little more work to do, but eventually we're going to see some type of impulse move like over here where you start to see a rally up. Let me just zoom in a little bit here. If we zoom into the chart, when you get an impulse wave, it means you're breaking some previous pivot highs. So you get a strong move that breaks a previous high. Usually you want to see 2 standout previous highs. At this high, both of these are pretty darn close. But once you've broken 2 previous highs with a strong move up, usually the first pullback can be bought, and that's the start of a new trend. And that's what we're looking for in silver here. We are still moving down, flagging our way down. We need to see an impulse move start to expand to the upside. Now, silver's only got a previous peak right here to get 2 previous highs. The other high is way over here. So we'll see how things shake out. Maybe it's going to pull back and consolidate here, and then we start to see it move up, and we could argue that this is a high and that this will be a high, and there will be an entry point lower in here. But overall, the momentum needs to break 2 previous highs in order for that kind of upward bias to have some strength behind it. You can see over here we had a rally up, it pulled back, it rallied again. All it did was break 1 previous high. It never broke the second one, and of course then the market collapsed back down. So same thing happened here. So we need to see that upward momentum. And once we do start to get an impulse move, a breakout where we start to break 1 high and 2 previous highs, you can see how the cycle starts to really, the cycle follows suit, or more or less leads the way, that the market is running higher and it's starting to break out. It's broken a previous high in the cycle, and that's a good sign. That's what we'll be looking for, is if we can break a high here, which we're pretty darn close to, it could be the early warning sign that we're seeing silver start to break out as well. Taking a look over at energies, natural gas down 1.67%. Again, chopping out is trying to form a bottoming formation here. If we look over at the price action from right here, this type of price action to me feels like it's something like this and something potentially like this or this. I think we're in this kind of the second the last third, more or less, of this pattern where we're going to see potentially some type of pullback or pause, consolidation, and then we could start to see it run higher. And that's what we're looking for going forward. Looking at crude, up 1/3%, continues to grind its way up. It's holding at the $60 per barrel area. More or less, it's a pretty ugly chart. You can see the upper range, the full upper range from the big high on the news of the bombing back in September. Around 63.50, and the lows down here around 51. So you can see we're working our way back up there. 60 is a fairly significant resistance level. Other than this big spike on news, you can see it was a previous significant high here. There was a spike high over here where big sellers stepped in. And then obviously it gapped above the 60 area and then pulled all the way back down to get back to the mean. And more or less we're back up into this upper zone. So overall, crude starting to feel a little long in the teeth. At any point we could see a big red bar and see this pull back, but overall not looking to really trade it at this point. We're just going to let it do its thing until it forms a clear pattern for us to trade. Last but not least, taking a look at the XLU utility sector. Yesterday it was pretty crazy. It really bucked the trend. It outperformed the SP 500, really popped and rallied to the upside. Not too sure what that means. Usually when we see a big pop like this, usually it fizzles out. But overall, it is still in line with this price pattern that it has had here. It has been consolidating here for several weeks. And of course, a breakout usually gives it some pretty good power. But you can see when we've had big bars like this in the past, where you see a big pop in utilities here, we can see it usually fizzle back down and fade back down. So we'll see where it goes. Overall, utilities are typically seen as a safe haven play. So some big money moving in to this kind of defensive safe haven sector. We'll see if that gives us any insight or if it is leading to a big sell-off in the equities market or not. But overall, it really is still had a rally, consolidation, and a pop. I would argue that that's majority of the move. It is right into resistance through this zone here. So we've got previous highs, lots of volume traded through this zone. So overall, just interesting to watch how it is moving because it was really bucking the trend. The safe havens were more or less down yesterday, but utilities were really strong to the upside. Anyways, that's it for now. Talk to you in a little bit.